Brett. I wanted to do a quick video for you to show you how to prevent something from happening to you that might hurt your loan or your chances to get a loan. I've seen it kill many loans over the years. Also, I'm going to reduce my face down to the corner, and my camera's here, but my big screen's here, and I like looking at my big screen, so I'm going to move the camera a little bit. But all right, so this video is how to get a loan without removing credit disputes. So let me show you something here. This is just a random credit report I pulled up with a bunch of disputed accounts. You can see disputed, 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 disputed. And for the record, these accounts have zero balance. For those mortgage people watching this that say, hey, those accounts have zero balances. Yes, that's true. I didn't have time this morning to look for a credit report with a dispute on an account with an actual balance. So that'll mean more later. I'm going to get to it in a minute. But so what's happened here is, as often happens, this person has hired someone, or they've done it themselves to improve their credit. And one of the tactics they use is they go in and they dispute every account, or a lot of accounts. And when you dispute an account, it tells the credit bureaus to ignore that account in their calculation of the credit score, which helps when you want to get your credit scores up. But when you try to get a mortgage, it introduces complications that can hurt you. So what happens is the qualified mortgage world, which is all the main loans we all use, conventional, Freddie Mac, Fannie Mae, FHA, VA, USDA, Jumbo, all these products, their approvals generally come from running the file through an automated underwriting engine. It's like an algorithm that evaluates the file, and it'll spit out an approval or not approval. So what happens is when you have disputed accounts and you run that file through automated, the automated underwriting engine will say, hey, you have a disputed account and it has a balance on it. Let's just assume this account had a balance on it here. So it'll say, I'm sorry, somebody just texted me. It'll say, hey, this account is disputed. You need to find out if this account is owned by the applicant. If it is, you need to remove the dispute. And 95% of the time, the accounts are owned by the applicant. So I can tell you, removing disputes is an arduous process. It can be time consuming. And if you try to do it fast using quick score or rapid rescore, it can be rather expensive. So let's just assume that you're in the loan process and you don't have time to wait 30 to 45 days to remove disputes, especially with Equifax. Equifax has a thing called internal investigation, and it's hard to get a dispute removed inside of 30 days with Equifax. So let's go through here. So I think I've told you why it's a problem. When it hits the automated underwriting engine, all these are going to have issues. You're going to have to remove the disputes. So let's say you don't have time to remove the disputes, but you want to close the loan. So one way to do that is through an FHA manual underwrite. So you can contact your LO and just say, hey, Mr. Loan Officer, I don't really want to remove these disputes. Can you just underwrite my file as a manually underwritten FHA file? And then the underwriter can ignore the disputes as the guidelines allow him or her to do. The one thing you have to watch out for that on a manually underwritten FHA loan is the ratios. They're a bit more conservative. The front end ratio is 31%, meaning the house payment, the full PITI house payment divided by your gross income cannot exceed 31%. The back end ratio is also low. I mean, if you can run an FHA file through automated and you can get approvals in the mid 50s on a ratio, but not when you do a manual underwrite. It's 43% cap on the back. which means the house payment plus the minimum debt, the minimum payment on your other debt that recurs monthly on your credit report, divided by your gross monthly income, cannot exceed 43%. So that's one way around it. Another way is to do a non-QM loan if you're self-employed or you're trying to get a non-owner occupied house. We have a couple options for W-2, but non-QM loans, which stands for non-qualified mortgages, it's another family of mortgages. But these loans, basically, they have more relaxed guidelines. You're going to pay a little higher interest, and you're going to pay, if it's a purchase, you'll pay more down than you have to on the conforming or qualified mortgage products. So these are a couple ways around it. If you want to talk about how to remove the disputes, that's another video entirely. I'll have my contact information at the end of this video. If you want to reach out to me or our office directly, you can do that, and I'll kind of coach you on how to remove those disputes otherwise. But this is a way to get a loan done with the disputes still on there. All right. That's all I wanted to talk about today. So you guys have a great day. And if you know anybody that needs help with a mortgage, just have them reach out to us. We're happy to help them. Okay? Thanks. Bye.